In this video, I'll be showing you what a moving average crossover strategy is and if it really works. So right now I'm looking at the MT4 trading platform. I go over here and this is the trading indicator that we will be using. I click on it and I drop it over here, and I can use a specific period, a moving average method, simple, exponential, smoothed, linear weighted, and also I can change this over here. I also I always use the close, and yeah, then you click on OK. For now I use the 20 and the 50, and I use a third one, which is the 250 exponential moving average. So what is a moving average crossover strategy? Basically what it is that you enter the trade when 2 or 3 indicators cross each other. So over here we have the 20, the blue one, and the 50, and over here we see that the blue one crosses the 50 to the downside, and as you can see over here, the price goes to the downside for 30 pips. And then normally when the cross happens, we enter the trade for a sell trade. Over here this is about 30 pips trade, and then we wait for a next crossover, which happens about here, and then we see that the price drops down for about 50 pips, and then it goes to the upside for about 15 pips, over here eventually 25 pips. And it depends on where your stop loss is located, if this is a winner or a loser. But basically, if the 20 crosses the 50, then we enter the trade if it goes to the upside or it goes to the downside. And we also, as you can see over here, have a white 250 line, and this moving average you can basically use as a trading filter. So what we can say is that we only take a buy trade when the 20 crosses the 50 to the upside, and the price is also above the white 250 exponential moving average. So this is basically an additional filter, meaning that we don't take a sell over here. It crosses, but the price is above the 250 exponential moving average, so we don't take the trade, right? But we do take this one over here, which is 17 pips, and we don't take this one. Why? Because it's a hard one. The price is below the 200 over here, so we do take the trade because it crosses to the downside, and the price is also below the 250. So this would be a trade about 13 pips. Over here we have another one, prices above the 250 line. We see a cross over here, and this is a winner of about 30 pips. So this is the moving average crossover strategy. You basically place a trade when 2 or 3 multiple moving averages cross each other. So yeah, that is the strategy. And does it work? Well, it could work. It depends on when you enter the trade and on what times, basically. So let's say that you do not trade Asian session because there is low volume, but when a crossover happens during the London session, for example, about here, you see that it's a nice trade, even though the price is above the 250. But let's say you do not look at this 250 filter, then it's a nice trade, right? So it could work, of course, but you have to back test it a lot and see in what trading sessions this trading strategy works best. You can also say that you only take crossovers when a break of structure happens. So over here we see that this high gets taken out over here. We see that it goes to the downside, and then we wait for another cross to the upside, and then we take the trade, which is about 40, and over here about 60 pips. So that is another strategy. Let me show you another example. Over here we see a move to the downside, break of structure. Now we are in a downtrend, and then it goes to the upside. Over here we wait for the cross to the downside, which is about here, and then we take the trade. This is a 110 pips trade. So that is something you can do as well. And if you backtest this a lot, then you see that this moving average crossover trading strategy definitely has potential. I hope you find this video helpful. If you did, please give it a thumbs up and subscribe to the channel for more Forex trading tips and strategies. Thanks for watching, and I'll see you in the next video.